leases there. So now the first thing that we want to look at is the issue of defining what a lease is, because as an organization, you have to identify all the leases that are going to be available. Now, leases is regulated by IFRS 16, which is a new standard. So before, we just knew that leases under IAS 17, there was an accounting that was done under IAS 17. So now it is slightly changed. So what is important is that we are supposed to know all the principles regarding the recognition and the measurement of leases. Are we together? Now, who can define a lease for me? For those who were there last week, what did we say a lease is? Good people. People don't want to talk to me or something. All right. Now, we can just simply say, from a layman's term, a lease, we can just simply say it involves one party. One party, that is the lessor, that will grant the right to use an asset to another party. This one, we call it the what? The lessee. Are we together? So in other words, we can simply say that a lease can be characterized by the right of use of an asset that is granted to somebody else. Are we together? But one thing that is also important is that the lessee should be paying a series of payment to the lessor over a period of time. So what is important is the issue of granting the right of use together to another party. So we will be having a lessor granting a right of use of an asset to the lessee, and the lessee has an obligation to be paying a series of payments over a period of what? Of time. Do we understand that? Are we together?
Yes.
Now,
yeah.
There are two parties that are involved in a lease in many cases. Are we together? There is going to be the lessor. The lessor is the one who grants the right of use. Are we together? And yes, we have the lessee. Are we together? The lessee is the one who is going to receive the right of use asset. So I'm not going to dwell much on the theory around the IFRS 16. What I want us to do is to dwell much on how do we disclose and how do we calculate the lease contract. Are we together? So simply put, how does IFRS 16 define in their own words? Are we together? So under IFRS 16, they will say a lease is defined as a contract or part of a contract that conveys the number one, the right of use of an asset for a period of time. And also in exchange for a consideration. Are we together? So we are just simply saying one has given a right to somebody to use an asset. Are we together? For a period of what? Of time, in exchange for a consideration. So in this case, we are simply saying that the lessor has given the right of an asset to the lessee. Are we together? For a period of time. And the lessee, please take note, he is going to pay a consideration. So that's why we are saying that there is an exchange for a consideration. Is that clear? Now, under a lease, the IFRS 16 is going to expand our lease, and they are going to say the first thing that they are going to talk about is that a lease needs to be an asset, dang it. So the first thing is that that asset should be able to be what? To be identified. So we need to identify an asset. Are we together? So an asset can be identified explicitly, or we can say it can be identified implicitly. Are we together? So what do we mean by that? So we are simply saying that the contract should name the specific asset. Is that clear? They should say, we are leasing a motor vehicle to Uzbaniba. Are we together? So we are saying that the name, the contract should name that particular contract. And that is what we call it's an explicit identification of an asset. Are we together? Or we can simply say that the contract is simply implied. Are we together? There we are simply saying it is an implicit definition of an asset. Do we have questions so far?
No.
All right. Then the other part that IFRS 16 talks about is that there should be a right to control the use of an asset. Are we together? Remember, from your FAC 3701, you defined what an asset is. I mean, we said it is the resource that can be controlled by an entity. And also now when we're looking at a lease, remember we are saying that you are conveying the right of use of an asset. So we are saying that the lessee should be able to obtain substantially all the benefits from the use of the asset altogether. And also the lessee should be able to direct the use of an asset. Is that clear? Good people? Right. So that's about the IFRS 16 that we should actually know. They can also bring a question and they say, does this meet a contract? So if it meets a contract, you just now know that is it falling under IFRS 16. The most important things is that there is a right of use of an asset altogether, and we know that if you are having an asset, you should be able to control the assets and also benefit from the asset. And also there should be a time that is given. Are we together? Also, there should be a consideration that is going to be paid by the lessee. So I think for you guys, since you are third year, it would be very much easier for you to identify a lease contract, because we are saying a lease contract is a contract where the lessor conveys the right of use of an asset for a period of time in exchange for a consideration. Now, remember we said there are two parties in a lease. We have got the lessee and also the lessor. So the lessor gives the right and the lessee receives the right. In other words, the lessee is receiving the asset. So the accounting that is going to be involved in the two parties in the contract are slightly different. So we are going to start with the recognition in terms of IFRS 16 when we are looking in the books of the lessee. Right, so that's our first part there. We are looking at the lessee. Now, the lessee can okay, the lessee, we are just simply looking at the person who has received the right of what? Of use asset. So let's start with the accounting of the lessee. Now, before under International Accounting Standard number 17, we would recognize two assets: property, plant, and equipment, because you would have received an asset, and also you are going to recognize the lease liability. Are we together? That is under IAS 17 for those who did their accounting a long time ago. But for those who are doing their accounting now, we are saying we are going to be using IFRS 16. Now, under IFRS 16, there are two accounts that are going to be created. Number one, we are going to create what is called the right of use asset. So now we are no longer preparing the property, plant, and equipment. Remember, IAS 17, it was shown under PPE, but now under IFRS 16, it is going to be called a right of use asset. And then we are also going to create a finance lease liability. Why is it liability? Because the entity did not pay the full amount when they acquired the asset. So when they acquired the asset, now we are simply saying that they are amounts that they're expected to pay over a period of time. Do we understand? So meaning that there is going to be a lease liability. So there are two accounts that we are going to first recognize when we are accounting for a lease in the books of the lessee. We have got the right of use asset. This one is in the statement of financial position, and also we will be having the lease liability in the statement of financial position. Do we have questions so far before we move on? But one team. It's confusion, or you don't hear me, or there's something.
We hear you, sir.
Okay, you hear me, Siamo. Right, so how do we recognize the right of use asset, and how do we recognize the lease liability? So whenever you are faced with a contract, good people, the first step that you need to look at, the first one is, let's write it down, and we write the the steps in the recognition of a lease contract. So the steps that we are supposed to take when we are looking at a lease contract. So the first step that we need to look at is you are going to check in the examination to say, am I given the incremental borrowing rate? So the incremental borrowing rate in the examination is going to be given. So that is what we are going to be using as our discount factor, which is our I. Do we understand? So we are going to be using the incremental borrowing rate. Are we together? Then if it is not given, so this one will always be what? Be given. So that's what you are going to use. So if it is not given, your first step, if it is not given, you are going to calculate the implicit rate. Yes, you were there, madam. So Siabo, you were listening. Anita.
Yes,
Right. So you are going to calculate the implicit rate in the lease. Are we together? How do we calculate the implicit rate? So the implicit rate, you are just going to come and you say my future value, that is now you are using your financial calculator, your future value is going to be the guaranteed plus the unguaranteed residual value. Are we together? Then N is the number of installments. I prefer to say number of installments, rather than saying it is the years. Then PMT is equal to your installments that are going to be paid. Are we together? Present value is the fair value of the asset plus the initial direct costs by the, please take note, the lessor. This one I will highlight. Are we together? We are saying that the present value is the fair value plus the initial direct costs by the lessor. Is that clear? Then you compute your interest, which is going to be your implicit rate. Is there anything that I have explained here which does not make sense? So that I can explain one by one. Okay. All right. So if there is no question, let's look at an example. Let's say on 1 January 2018, A leases a machine to company B for a period of 3 years. Are we together? At a rate of 10%. The fair value of the asset of the machine is 150. Are we together? The installments that will be paid annually in arrears, very much important. It can be in advance or it can be in arrears, is equal to 58,000 per installment. Are we together? Year end is 31 December. So I want us to calculate the implicit rate. What is our implicit rates from our, remember I gave you the formula there, our implicit rate. Can you try to do it on your own using the principles that I gave you? Right. Can we do it together? Ngicela i-answer bakithi. There is no answer. Oh, I'm alone.
We are still calculating.
Oh, you're still calculating. All right. If you're done, please give me the answer. If you are struggling, just let me know. I'm here for you, good people.
I say PMT. I'm struggling there.
Yes, what's wrong now? PMT is the installment of 58,000. And the cost of the asset is 150. What is the problem? All right, let's do it together. We said the future value is the guaranteed plus unguaranteed residual value. So we are not given that. So we are going to put 0 plus 0. Is that clear?
Yes.
Then N is the number of installments. How many installments are we going to pay? 3, and each installment is paid at the end of the year. So N is 3. PMT is equal to 58,000. Are we together? Our present value is going to be 150,000 plus the initial direct cost of the lessor. Please take note, the initial direct costs that have been incurred by the lessor. So the present value in this case is equal to 0. Then you compute your I, which is your implicit rate. Now let's help those who can't use a calculator. If we have got an HP Is it 101 B2? You are going to first check how many times your calculator is compounded. So you press second function, C. Are we together? Then you should see on the screen, it should write 1P payment per year? Please, those with HP, can you do that? It should show 1 per year. If it is not showing 1 per year, you let me know, then I'll tell you what to do.
It's 1.
Anyway, yes, if it's 1, then we are good to go. So those, if it is not showing 1, please, you are going to put it back to 1 payment per year. How you do it, you press 1, second function, and you put PMT. You press PMT there to make sure that your calculator is set on 1 period per year. Is that clear? Right, so after that, right, for sharp, your life is good. To reset your calculator, it is your function, alpha 0, 0, to just make sure that everything is okay, or you can just go at the back of your calculator, then you press the reset, you've resetted your calculator there. Is that clear? Right, so do now is you are going to first press 0, then you press FV. 3, you press N, 58, PMT, 150,000. Now, please take note. The 150,000 is an asset that you have received. So, in many cases, what you can do now, the PV and future value cannot have the same sign. Do you understand? So I prefer that you put your PV as a negative. But under normal circumstances, we know that the future value and the PMT are the ones that are negative because the lessee is going to be paying money. But I've seen that in many cases, people will forget to put a negative on future value and a negative on the PMT, or you put a negative on one, then you leave the other one. Then you're going to get your answers wrong. So it is safer to say, let's just put our negative on the present value. Is that clear?
Yes.
Did you understand what I said, good people?
No, please come again.
So you are going, right, I'm saying whenever there is present value and future value, they cannot have the same sign on the financial calculator. Do you understand? Because if you put all of them as positive, the calculator is going to say error.
Okay.
Because the calculator is assuming that you have invested and you are going to get money. So one will be positive and one should be what? Negative. So to be on the safe side, let's just make our present value plus or minus. Is that clear?
Okay.
We're going to make our present value plus or minus. So you're going to press 150 plus or minus, it's negative. Then you press PV. Then you compute your I. How much is our I there, Matwamti?
7.8.
7.8.
Right, you are going to get 7.8%. Are we together? Now, that was the first step. Are we together? The second step, number 2. The second step is to calculate the right of use asset and the lease liability. If you write these steps down, your life is easy. Are we together? So the second step is to calculate the right of use asset and the lease liability. Now, how do we do that? How do we calculate the right of use asset and the lease liability? Our future value now is going to be the guaranteed residual value. You see, it is different from the first step. The first step was guaranteed and unguaranteed. Do we see that? At least omunye kathi yes phela bakithi.
Yes.
All right. If you are a sangoma, when you say vumanbo, when people are silent, it means that abavumi into ekhulumayo. So if I say vumani, you say siyavuma. Right? So our future value, good people, there is a guaranteed residual value only. Are we together? Then N doesn't change. It is the number of installments. PMT is the what? The installments that you are paying. Our I is the implicit rate. Then you are computing the present value. So our present value, in this case, we can say we are simply calculating the right of use asset. So if you're not the right of use, it is the lease liability. Write that one down. So the second step, we are calculating the lease liability. So when we calculate our lease liability, we say our future value is the guaranteed residual value. N is the number of installments. PMT are the installments that are being paid. Then I is the implicit rate. Then you compute your present value. Clear? All right. So using the same example that we had on top, how much is going to be our present value? Our future value is 0. N is 3, still 3 years. PMT, and your PMT, we say it's how much? 58,000. Our PV, our I is 7.8. Then you compute your present value. So in this case, it will be easy because the information that we had on the first step and the information that we have on the second step is the same. So definitely you are going to get 150,000. But if we had a guaranteed residual value, are we together? If we had a guaranteed and unguaranteed residual value, the figures were going to be different. So today we are just introducing you to the module, but one team. So if I'm introducing you, what I'm just simply saying is you just have to fully understand the principles that are there. Just do it again and find your answer. Please don't reset your calculator. 0, future value. 3 is N. 58,000 PMT. 7.8 interest. Compute PV. I'm getting 150,013. Is that what we are getting?
Yes.
Yes.
Yes, sir.
Yes.
Yes, sir.
150,013. So that is your lease. Remember, we said you are going to recognize the lease liability and the right of use asset on it. So the lease liability we now have, it is 150. Now, under the second step, there is another one where we are supposed to recognize the right of use asset. So how do we recognize the right of use asset? It is going to be the amount that you got as your lease liability. How much was it? Which is my PV. Are we together? Then you add the initial direct costs. This time it is by the lessee. Then you get your right of use asset. Is that clear? Like, for example, let's say the lessor incurred legal fees to get this contract. Those legal fees are going to be capitalized on the right of what? Of use asset. Or maybe they might have paid somebody a fee to get this contract. It is an initial direct cost. It is different from this one. Remember that we had said our present value is the fair value plus the initial direct cost by the lessor. This time it is by the lessee, the right of use asset. Remember, we know that in IFRS 16, the cost of an asset is the cost of bringing the asset to its present location and usage. Do you understand? So in this case, we are saying our lease liability, that is the value of the asset according to the contract altogether. Then we have to add any other costs that were not included in the contract. Are we together? Other costs that we know as an organization that we incurred to get this contract. So we are going to add the initial direct cost that is in the books of the lessee. So in this case, what the entity has done, it has recognized the lease in their books by, what is the journal entry that we are going to create? The journal entry. So we are going to debit the right of use asset, SFP, and credit the lease liability in the statement of financial position, just like that. Now, let's do the substitution of this question that we were looking at there. Right, so we said our present value is going to be 150. I know on your calculator you have 150.012. It was because of rounding off. So I'll just put 150 there altogether. There were no initial direct costs that were incurred by the lessee. So the right of use asset is going to be 150,000. So when we recognize that 150, we are going to debit 150 right of use asset and credit 150 on the lease liability. Is that clear?
Yes.
All right. Any questions, additions, or subtractions?
Sir,
Yes, ma'am.
you said that 150 you are using on a journal entry. Is it the
Yes.
one you just calculated?
Yes. Aniti, you calculated, okay, if you want that one, let's just come and we put that's what we put under the second step, Aniti. It will be 150.013, ne?
Yes.
Yes, that's the amount. I was saying you got
Okay.
150.013 because you had 7.8 point something. So because you did not put the something, that's why you only have the difference there. Right.
Okay. Thank you.
Right. After the recognition of the right of use asset and the lease liability, then you know that the lessee is going to be paying installments at the end of each and every year. We agree, ne? Each and every year, the lessee is going to be calculating is going to be paying the lease payments. So now, when the lessee pays the lease payments in the financial statements, the lessee, when you pay, the lessee is going to be paying every year 58,000. So I'm going to come and put 58,000 there. Now that 58,000 that is being paid, the entity is paying the finance cost which is our interest in the profit and loss account. And also it will be paying the lease liability, which is the capital, SFP. Okay, just put it like this. So this is the recognition of the finance cost and recognition of the payment of the lease installment. So that's the second journal now. So the first journal, we recognized the asset. So after the asset has been recognized, we have to be looking at the payments that the entity is going to be paying. Then we also have to recognize at the end of the year, the depreciation. The asset should be depreciated, obviously, and then we calculate the accumulated depreciation. We are going to explain how to calculate the accumulated depreciation at the end of this class. Happiness. Happiness?
Yes.
All right.
Yes.
Yes.
Then, now, how do we now calculate these two? That's what we want to learn now. We have to calculate the finance cost, the lease liability, and also the amount that has been paid in the bank, 58,000 that we have. So therefore, we are going to prepare what is called an amortization table. Now, our amortization table will have the installment. We have the interest. Sometimes some will say principal, or you can say it is the what? Capital. Then we have the balance. We had 1 January 2018, if I'm not mistaken. Was it 2018? Yes, 1 January 2018. Then the end of the year is 31 December 2018, 31 December 2019, 31 December 2020. Right. Let's start. Now, let's write this one down. That 1 December 2018 is the first installment. So write 1 there. That 1 December 2019 is the second installment. You write 2. That 1 December 2020 is the third installment. You write 3. All right. Right. First thing that we need to look at are the installments that are being paid every year. The entity is paying 58,000, 58, and 58. Happiness.
Yes.
On 1 January 2018, our balance was 150,013. Now, if you had restarted your calculator, can you calculate now your present value again? Calculate your PV again if you had restarted your calculator and wait for me. Then we move together. Are we there? Get your PV, but one team. If you're not getting it, please let me know now. Silence means confusion or what?
We done.
We're
We're
done.
done.
Done. All right. So after you are done getting your present value, let's start with those with the HP 101 B2. Good people, let's show here we are all learners. We are learning. Please take note of that. We are all learning. So if you don't have what I have written here on your calculator, please let me know out together. Because in the next coming classes, we will be just cruising because I have taught you this. So make sure that you are right on your calculator. The figures that you have are the same as the ones that I have here. Don't wait to say I'll do it after class. No, let's just do it together. Then next week, we are going to learn how to disclose this information in our financial statements. Today, we are doing the basics. Are we together? Next week, we are going to apply these basics that we are looking at. Or we can have a class on Tuesday, it's fine. HP 101 B2, right? If you have your PV, it should be written 150013. So the first step that you do, you are going to press 1. There is input on your calculator. Shift is the orange one. I don't know what color it is now. Maybe there is a new one. 1, shift, then you press amount. So when you press your amount, it will write 1 to 1 on your screen there. Then you are going to press equals, equals, equals. Let's do it together. Please give me the figures. I have a sharp on my side. So I'm assuming that you'll be giving me the amounts as they are given. You tell me it's written interest or principal or it's written something. Let's get the figures. No one is using HP.
Smaller.
The first one is 46299.
And what is that? Is it principal, interest? What
Principal.
is it?
Yes, principal.
Okay.
More
The
principal.
principal is what?
46299.
Yes. 399.
No, 299.
299. Thank you. Then the second one, you press equals again.
Second one is int, and it
Yes.
is 11700.
And then the last one,
Gives me negative 103 or 104.
that's balance.
Yeah, balance. It gives me negative. Is that right?
Yes, 104. Yes.
Yes, yes, that's it. Oh
Only
no,
104.
104. Okay, just wait. I rounded it off. It's 103713.
Okay. Then, if you want to go to the second period, are we together? You are going to follow the same step again. 2, input, shift, amount. Are we together? 2, input, shift, amount. If you want the third one, 3, input, shift, amount. Happiness. Now let's go to those with a sharp. Now, if you have a sharp Angithi, we have our balance as 150,013. 150,013. So if you have a sharp, you are going to press.
Sorry, sir, is
a
it
more.
okay? It's a minus.
No, it's fine. We don't worry about the sign. It's a minus because you
Oh.
put it as a positive amount.
Okay.
So yes, don't worry. So our sharp, yes, sir.
When you say one input, do you mean one that is 58,000 or just one input?
Yes,
amount?
you press the button number 1. Then you
Okay.
press a button written input. Then you press shift. Then you press amount.
Without putting any amount.
Angithi, the first thing that you have done was to calculate your present value. 150,013. That's what is there on your screen.
Okay, all right. Okay, I get it.
Nah.
Okay, thank you.
Yes.
Yeah.
So after getting 150,013, now you come and you follow these steps. Those are the steps for amortization.
All right. Okay, I get it.
Okay.
Thank you.
Right. Now, if you have a sharp, you have 150,013 on your calculator. Now, please, if you don't have it, do it now. Or ask if you don't have Ulysses. Right. Silence means confusion or people are sharp.
We have it.
All right. So you are going to press amort. There is a MRT. Spelling is wrong.
Sorry, Ngobane, are you saying we press the amount first?
No, there's no amount that I said. I said compute
Oh.
PV. Compute.
Oh,
Did you compute PV?
yes.
Yes. If you have PV, what's written on your screen now?
Yo,
Do it again. I'll wait for you. Don't worry.
okay, thank you.
I'll wait for you. And have PV on your screen. This class, I don't want anyone to be left behind because in the next classes now, that's when you are going to be learning accounting. Do we understand? So for today, make sure that you fully understand how to deal with your calculator.
Okay, I've got PV
Yes.
minus 150,012.68.
Yes. Yeah, sharp. Then press a MRT, amort. Then you press amort. On your screen, it's written P1. It's saying from what period. So you press 1, then enter. So 1, then you press enter. Did you press enter? Then down arrow. There is a down arrow there. Are we together?
Now
1,
it's saying two.
enter, down arrow. Now it's written P2. On
Yes.
P2, you press another 1, then you press enter. Are we together? It will write balance.
Yeah,
I'm lost.
yeah, it's
1,
written
0,
balance 103713.
yes, 713, 7. That's what I want. Then down arrow, it will write principal 46,299. Down arrow, interest 11,701.
Oh, okay.
Is that clear? Or the madam
Yeah,
is-
no, it's clear now.
Please
clear.
come again.
All right, on which calculator, madam?
Sharp.
Okay. On the sharp, I need to the first thing is to calculate your present value.
PV, yes.
Yes, you've calculated your PV. So after getting that PV, you are going to press amort. The steps are given there. Press amort.
Yes.
Let me change my color. You press amort, then 1, then press enter.
Yes.
You should write P1 on your screen. Then you press down arrow. There's a down arrow.
Yes.
Then 1, then enter again.
1 and
Yes. Tell me what's
Yes.
written on your screen. What's written on your screen?
AMRTP21.
Okay. P1 is 1, eh? Then P2, then you press 1, enter again, then down arrow. What is giving you?
Okay, balance
Balance.
103,714.
714.
74, yeah.
Yes, I need. So let's now do this. On our what do you call this? On our amortization table, I'm going to write 103,714. That's my balance. The principal is 46,299, and the interest is 11,701. Are we together? Now, after that, we now want to go to the second period. And it on your screen, it's written balance. You press down arrow again,
Yes.
and it's now
no.
saying P1.
No, we're
Yes.
still on interest, Mos.
Okay, it's still
from
on interest, then press down arrow.
Oh,
Press down arrow.
okay. Yeah.
What's written now?
P1.
P1. Now what period number what? And there we were dealing with period number 1. Now we want period number what? Number 2. So you press 2, enter.
Okay.
Down arrow. 2, enter. Down arrow.
5380.
Right. Then you get your balance. It's what? 53.
53803.
803. Sorry.
I'm lost now.
What is the problem, madam? Don't be lost. Ungasali, ma'am. What's wrong on your screen? Is it written error or
Yeah.
something?
Error.
Yes.
Yeah, it's error on my
Written
side.
error because you did not follow my instructions. Can you press on? Press on.
Okay.
I need. If you pressed on, press amort again.
Yes. Now it's P1.
Right now, which period do we want now, madam?
2.
Like press 2, enter.
Yes.
Down arrow. Again. P2, we are saying period 2 to period 2. Press 2 again, enter. Down arrow. Tell me what we have on your screen.
Yeah, minus 5.
Okay, minus 53. Yeah.
Right.
Yes, 53803. Then down arrow, we have our principal. Now I'm not going to be writing there. It's 49910. Those with HP, I know you guys are enjoying life there because you don't have to do down arrow what. It's just equals. If you have a different answer, please let me know. 49910. Down arrow, our interest is 8090. Ne? Yes. Right. Happiness.
No,
Now
it's
you can go to
8089. No, right. Oh yeah, 90.
yes.
Right.
Something.
You're
Yes.
right.
All right. Then we come to now we want period number what? Number 3.
3.
So for period 3, what do we do? You press 3,
3.
enter. Yes. 3, enter, down arrow. Our balance after period number 3, obviously you will finish paying your installments. You get 0 there.
0.
Yes. Down arrow, your principal is 53,803. Ne?
Oh, yes.
The interest is 4197.
97.
Right, 13.
4197. Yeah.
It's error.
Because there's a lot of enter 3, enter 3. but-
Yes, please don't forget, if you have an error, just press on, then amort, then you go to 3 straight. You don't have to restart. Right. Any questions, additions, or subtractions? What we're doing here is just 3 marks in the examination if you have disclosed. More marks are on disclosure. Could be, are we together? More marks are on disclosure. But today we are just learning how to calculate those amounts that we are supposed to disclose in our financial statements. Is that clear?
Yes.
Yes.
Right. If you are still struggling or you were shy to ask, I will share this video on the group. You will practice again on your own. Right. So after this, we are going to learn the following things then. How to show it in our financial statements. We are learning journal entries today. Only journal entries. So in period number 1, year 1, we paid 58,000. So we are going to come and credit our bank 58,000. Remember, we are in the books of the lessee. Good people, don't forget. Our bank, we are going to credit 58,000 of the installment that was paid. Then we are going to come and look at our finance cost. It is our interest. Our finance cost is 11,701. Are we together? Then our lease liability. Our lease liability is how much there? 46299. Happiness.
Yes.
All right. Then we are going to account for depreciation and accumulated depreciation. Are we together? Now, let's look at the issue of calculating depreciation then. Let's write notes. Depreciation is normally, you are going to depreciate an asset over the what? The useful life of an asset. Remember, we are in the books of the lessee. Now, if the asset is going to be transferred, if the asset is going to be what? To be transferred, they will say that this asset is going to be transferred to the lessee. You are going to use the useful life of the asset. Use the what? The useful life of the asset, or we can use the lease term, but use the what? The useful life of the asset if it is longer than the lease term. If the asset is not transferred, we are going to use the short of the lease term or the useful life. So if the lease term is 4 years, the useful life of the asset is 5. The entity is not going to write off this asset over a period of what? Of 5 years. It is going to write off the asset over a period of what? Of 4 years. Is that clear?
No, sir. Will you just explain that again, please?
All right.
Yes, okay.
Remember, I need you to have entered into a lease contract. And when you enter into a lease contract, let's say that you are given a machine and somebody says, no, the useful life of this machine is 5 years. Are we together? But when we entered into this contract, the lessee entered into a contract over a period of what? Of 3 years. So when he's going to depreciate the asset between 3 and 5, which one is the lessee going to use? Since we said the asset is not going to be transferred, So at the end of the lease term, the asset will not belong to the lessee. It will be taken back to the lessor. So I'm saying, which one would you use between 3 and 5 years when calculating your depreciation there?
3 years.
You are going to use 3 years since the
Yes.
asset is not going to be transferred. Now it can, but if the asset was transferred, is going to be what? To be transferred at the end of the lease contract, you use 5 years. Is that clear?
Yes.
Yes, thank you.
All right. All right, Sebo. Any questions, additions, or subtractions on this topic? This was just an introduction, but one team. So don't stress. All right. Now, when you go to your study guide, under Lessees there, please look at the basic examples on how to prepare an amortization table. Are we together? You are just practicing now, so that when we meet in the next class, you are not going to be asking, say, I don't have an answer on my calculator. I don't want such questions next week. Are we together? What I want to be asked is, can you explain that again on the principle? So you should be able, this coming week, you are practicing on the calculation of the amortization table. So you are going to do examples. Example A, payments in arrears. Then you also look at example B, when the payment is made in what? In advance. When the payment is made in what? In advance. Are we together? So when the payment is made in advance, you are going to also look at that. Example A and example B. You are just practicing on example C. Also, you look at that one in your study guide. You also look at example D. All right, all those. So next week, we are going to learn the disclosure, and also we are going to learn if the accounting period is not the same as the lease period. Remember, sometimes the lease can be paid during the year, and our year is paid every, let's say our lease, we are paying our lease installments in November, but our year end is what? Is December. So how are we going to account for such a scenario? Is that clear? Good people?
Yes.
Questions? There is none. Confusion, we are not confused. We are happy to go. All right, so it's fine. All right, so we are going to look at that in the coming week. So in summary, today, we learned what a lease is. We learned the steps that we take in the accounting for a lease. Step number 1, we said you have to calculate the implicit rate. Step number 2 is to calculate the lease liability and the right of use asset. Then step number 3 is to calculate the amortization table. Are we together? Yes, you do the amortization table for you to account for the interest and the principal in those years, so that you can take into account the what? The amounts that would have been paid. So we are going to learn how to disclose the coming week. So we are looking at this one was a finance lease. We'll look at an operating lease in the coming weeks, or the low value asset and everything in the coming weeks. For today, we were just concentrating on the finance lease, where the risk and the rewards are transferred to the lessee. Are we together? Right. Now let's do MAC 3701. Right, yes, ma'am.
Those who are doing 3762, are we still going to revisit this module or what? Because our second assignment, I think, will cover these leases.
Why would we revisit this topic when we have already done it?
When you're doing our assignment, what are you going to do?
When you're doing your assignment, you okay, let me not record this. It's fine. Stop.